Hello, I'm Sarah Edens, a finance coach, author, and wealth mindset researcher. I teach you how to unlock your inner millionaire by developing a wealth mindset and laying a strong financial foundation for yourself. If this interests you, then please come subscribe to my channel and be sure to hit the notification bell so that you receive notifications every time I upload a new video, which is on Mondays and Thursdays at 5 p.m. Central Standard Time. And if you're a returning viewer, welcome back. I'm always delighted to have you here. Today we're going to talk about 3 ways to keep your credit cards paid off. This can be a challenge these days, especially with inflation and how it's hitting everyone. Statistically, right now here in the United States, a family is typically carrying about $6,000 worth of credit card debt per household. And that just shows you kind of how we have progressed as inflation has continued to go up, that people have just been funding more and more of their lifestyles with debt. And this isn't bad or wrong, it just tends to get very stressful when you know you have that kind of debt burden hanging over your head, and it also tends to get rather expensive because credit cards are pretty much the most expensive loan. It's a mini loan, right? But credit cards are about the most expensive loan you can take out, and often they will run anywhere from on the lower side 10, 11, 12% all the way up to 22, 23% interest rate. And so that can start to add up very quickly, especially if you're routinely carrying balances. So let's get right into the 3 ways that you can keep your credit cards paid off. The first way is by being able to have another look at your budget, because if you're running your credit cards over, chances are something is going on with your budget. It could be that you haven't reviewed it in a while. It could be that you've got a new expense that's come up that's starting to affect your budget every month or every couple of months. It could be that inflation has just gone up that much and now everything's costing that much more, and so you're having to put more things on the credit card. But go back and have a quick look at your budget and just assess it and see if there's anything really obvious that's jumping out at you that's running it over. If not, it could just be this kind of inflation creep that we're all experiencing, and if so, then look and see if you've got areas in your discretionary spending categories that you can maybe cut back on, or on the flip side, see if you can find ways to bring in some more money for yourself and your family rather than necessarily having to cut more corners and perhaps start to really feel it with your quality of life. Maybe it's less trouble to go out and get another part-time job or start a side hustle or something to that effect. So just do whatever's best for you, but that is the first step, is identify what's the culprit in running your budget over. The second point is to go ahead and look at your APR on your credit cards, and that stands for annual percentage rate. And all that is just how much it's costing you to use that credit card. And like I said earlier, some credit cards are cheaper, some credit cards get more expensive, some credit cards even have annual fees associated with them, which I would not recommend that you get, because there are plenty of credit cards that do not charge you annual fees to use them, so don't pay that on top of paying a high interest rate. And so go to your credit card statements, whether it's your paper statements or your bank statements, and have a look at what your APRs are on those cards, and then target your highest APR card and see if you can't get that one paid down first, and then go through the same exercise again if you've got a couple of cards, and just pay the next one down, pay the next one down, and then you've got your credit card debt cleared up. So I know that sounds a lot easier than it really is in real life, but that's a great strategy because you start with the cards that are costing you the most because they're charging the most interest on those balances you're carrying over, and then work your way down. So that's what I'd recommend for that. And then if you happen to have a situation where you've got credit cards where they're all in the 20% or so interest range, then what you want to do is maybe talk to your bank and see if you can take out a loan, like a personal loan that's got a better interest rate than those credit cards, and use that loan to pay your credit cards off. And then you're still working on paying the loan, right? But if you can get a better rate on the loan than on those credit cards, it's going to be far less expensive for you in the long run. And that's going to help you tackle that debt that much faster, because none of us need any extra stress these days, and particularly not the stress of and burden of credit card debt. And then the third thing that you can do as well, and just to back up for a minute too, with the interest rates, the people making the money off those interest rates is obviously not you. It's the credit card companies who are extending you that little loan. And so it's fascinating. But in 2020 alone, credit card companies in the U.S. reported making a income of $76 billion off of credit card interest fees just in 1 year, just in 2020. $76 billion. So we don't want you putting your money into the pockets of the credit card companies. We want it to stay in yours so that you can use it to build your dream life. And so that is like a really good thing to keep in mind is, who do you want to help here? Do you want to help your credit card company, or do you want to help yourself? And so that's a really good strategy as well, just kind of to think about, is who's benefiting here? Are you benefiting, or are they benefiting? Let's turn that equation around so that you're the one that's benefiting from this equation. And then if you're really struggling, if you've looked at your budget and you've stopped using high interest rate cards or gotten your highest ones paid off, but you're still running balances over every month, what I would recommend that you do is consider just using your credit cards for your needs. So for your housing costs, if you're paying that with your credit card, for groceries, for gas, for utility bills, if you're paying utility bills on your credit card, just keep those paid off, or pay those on your credit card. And I don't recommend people close their credit cards, because that is going to reflect badly on your credit score and your credit history. So keep your credit cards open. But if you still have one that you're using and it's still giving you trouble, then just use your credit card for needs and then have a debit card for your wants. And then you can budget out how much money you have that you can spend every month for your wants, and then use your debit card to make those purchases and keep a close eye on that account, so that then when you're have spent what you have to spend for the month and you're just your fun money or whatever, then it's gone and you're like, okay, there'll be more money next paycheck, next month, whatever. It's fine. I can live without that for another week or whatever. And so that can be a really good way as well, just to kind of curb those impulse purchases that are so easy to put on those credit cards. Because with a debit card, it's the same as spending cash, just a lot easier than having to carry cash around. Or if you're doing online purchases, obviously you can't use cash to purchase anything online, but your debit card is the way to functionally use cash to make your purchases anywhere you choose to. And the one caution I would say is, make sure to have overdraft protection on your checking account that's tied to your debit card. And that's just as simple as logging into your bank, pulling up your checking account, and from your accounts tab, set up overdraft protection. You'll just select which one of your credit cards you want to put on as overdraft protection. So if something goes through your debit card that you weren't expecting, or an expense or whatever, it was more than you thought, then all you have to do is it'll roll any extra over to your credit card, and it's not a big deal. And so you're not racking up overdraft fees, because those can be $25, $35 per charge, and that starts to get very expensive very quickly, and that's not what we want either. So just be savvy with the way you use your debit card, and make sure you're not overdrawing your account. Make sure you've got overdraft protection just in case something happens there. But that is going to help you a lot, because I think it's really easy with credit cards to get into the habit. Unfortunately, it's all too easy to say, oh, I've got XYZ amount of credit limit, let's say $2,000, $3,000 on my credit limit on my credit card. So you're thinking, oh, I have all this money that I could spend, and it's not really there if it's not in your budget, right? And so, but it's kind of psychologically there in your mind that you've got $2,000, $3,000 that you technically could spend, and then be in a mindset of, I'll pay it off next month, I'll pay it off later. Well, next month or later, you're going to have more expenses that will need to be paid off as well. And so that just gets a bit challenging and frustrating, taking money from your future self and so forth to buy what you want right now. So if you can get into the habit of using debit cards for a while, that works as well. And then if worst case scenario, don't throw your credit cards away, because that hurts your credit score. But worst case scenario, you can always just take a little break from using your credit cards, use debit cards instead, write checks, do bank drafts, whatever is the best way to pay your bills without a credit card. There are obviously many ways to pay for our life without credit cards, and maybe just take a little bit of a break as well and just kind of see how that goes for you too, because you may find that you don't need to use your credit cards as much as you thought. You were spending more on interest rate than you were getting back in rewards points, whatever the situation might be, and that those were just creating extra stress and hassle for you. So, whatever's best for your situation and your family, you know best. And so, definitely take whatever steps you need to take to eliminate any trouble zones with your credit card. So I hope you enjoyed this video. Thank you so much for watching it until the very end. And please again remember to subscribe and hit the bell button for more notifications. We're here now on Mondays and Thursdays uploading new videos at 5 p.m. Central Standard Time. And also you can join me over on my Instagram Live. I'll put a link in the description box for that, where I hold a live Q&A called Ask a Finance Coach Anything on Wednesday mornings at 11 a.m. Central Time. And that's your opportunity to ask me anything about my money and personal finance. So you're welcome to drop questions that you have in the comments on this video. And I'd also love to see in the comments if you have other strategies that you use to keep your credit cards paid off and to responsibly use credit cards. I'd be really interested to see your comments as well. So please feel free to share that with our community here. I hope you have a wonderful day, and thank you so much for watching.